So the market finished up on the day. Apple just ended the earnings call, and I've talked a lot about coronavirus, so I'm not going to go into that. So market's up on the day. A lot of people are buying the dip, and that's a good strategy. You know, if there's a dip, you buy it. You find underpriced gems that you want, and you make purchases. But I don't really know if this dip is just that, 2%, 2.5% on something as big as a coronavirus. I think this could continue going down. I think we'll kind of get to the bottom of the trend, and then we'll kind of ride that, pull back up and everything. Now let's dive into the Apple earnings call. Great, huge, massive 10% beat. So 10% beat on the expected earnings. I believe the expected earnings are something like $4.45 or $4.45 per share. They had $4.99 per share. Pretty good beat. Now, what contributed to those earnings? Well, we've talked a lot about Apple, how they're kind of evolving into a services-based company, how they're going to start making a lot of money on their services revenue. But we actually saw a decline in services growth. So the big winner was iPhone 11. Now, a lot of people who use TikTok, see all these influencers who got their iPhone 11s, you probably had some suspicion that more people were buying the iPhone 11 than we thought. But not a lot of Wall Street people thought a lot of people were going to buy iPhone 11s, at least to the extent. So iPhone 11 completely blew out expectations, and that led to the massive beat on earnings expectations. But the revenue decrease, percent-wise. So Apple had been turning over 18% revenue increases on subscription-based products. So, for example, Apple Music, Apple TV. And this quarter, they had 17% growth. So we want that number to be going up, especially with new products like Apple TV. They're going to be adding new products in the future. So the fact that they didn't go up in, change in revenue is kind of concerning, because that's kind of like their long-term growth sector. Brings a lot of recurring revenue. Remember, it's not a $5 Apple Music. It's not a $5 Apple TV. It's $5 a month. So the thing is, tech is becoming better and better, and it's needing to be replaced less and less. So they're really trying to bank on this recurring revenue model from subscriptions. Now, it's Apple, right? We love Apple. I love Apple. I don't think it's going to change a whole lot. I think they're going to offer some great subscriptions that we're all going to want, and we're all going to continue purchasing Apple products, and they might even continue to grow their market share. But we do live in an Android world, and we're kind of hitting a plateau, at least I think, this is my opinion. We're hitting a plateau with hardware in terms of iPhones and maybe even computers. So if they can keep, refining the software, adding new services, making some more money off that, no reason for concern. It's Apple at the end of the day. It's the biggest company in the world besides Saudi Aramco. But we want to make sure they're, continuing to make money, not losing to the competition of Android. I'm a big Apple fan myself. And I don't like Android. I have an Android for my app testing stuff on Android and everything. I definitely prefer my iPhone. So let's hope for the best with Apple. Let's hope they keep doing their thing. Earnings call was great. iPhone 11 sales were out of this world. We'd like to see some stronger recurring revenue sales, subscription-based sales, services, essentially. But, I guess not everyone's watching Apple TV. We'll see what they drop, what the releases are, and let's see some more Apple. I expect a lot of good things in the future. Nothing new about any new products. Obviously, that's kind of how they roll. No more guidance past the next quarter. So I'm going to say one thing about coronavirus. They gave a $4 billion range. So a plus minus, could go that in either direction, of $4 billion on their expected earnings for next quarter. And they cited the uncertainty in China, contributing to that. They've, said that although they don't do a lot of sales in Wuhan City, they do a lot of sales throughout China, and they're not going to be taking that revenue for a while. So they think it's going to contribute, and they don't know how long they're going to be closed. So a $4 billion range on expected earnings for a quarter is a whole lot of range. So we'll see what happens, and let's stay in touch. Be good out there. Peace.